No, they say hit the gavel hard. Well, anyway, good morning. The Committee on Insurance and Financial Services shall come to order. Mr. Clerk, will you please call the roll to establish a quorum?
Chairwoman Carter,
Present.
Representatives McFall,
Here.
Coleman, Stone,
Here.
Breen, Rogers, Scott,
Present.
Young,
Here.
Fitzgerald,
Here.
Grant,
Here.
Minority Vice Chair Harris,
Here.
Representatives Markkinen,
Here.
Bazat,
Yes.
Aragona, Ruck,
Present remote.
Nair,
Here.
and Smith. Madam Chair, you have a quorum.
Thank you. Now we need a motion to adopt the minutes of April 20th, 2023 as printed. Representative Bazette moves to adopt the minutes as printed. Hearing no objections, the minutes are adopted as printed. Now we're going to hear testimony on House Bill 4343. Rep. Conlon and your guests, please come up to. Today we will be hearing testimony on House Bill 4343. Here to testify on the bill is the bill sponsor, Representative Conlon, Jessica Akmoody, Policy Director for the Community Economic Development Association of Michigan, and Tom Hickson, Vice President of Public Policy and Advocacy for the Michigan Catholic Conference. Thank you all for coming. The floor is yours.
Thank you, Chairwoman Carter and members of the committee. Thank you for allowing me to testify on House Bill 4343, which would require the Department of Insurance and Financial Services to conduct a 7-year study on payday lending practices in the state of Michigan, issuing a yearly report to the legislature and making this information available to the public. You may have heard scenarios where an individual is unable to pay back this type of short-term loan in adequate time and chooses to roll over that debt into more and more payday loans. To further this concern for the citizens we represent, deferred presentment providers often operate in communities that are already financially vulnerable or marginalized. Combined with the now waning COVID crisis, Michiganians are at a greater risk of instability. In an effort to promote transparency and understanding, HB 4343 ensures that DIFs would capture data around the number of lenders and borrowers, transaction volumes and amounts, interest rates, and fees charged, the distribution and density of payday lenders statewide, and complaints submitted to the department. We have collaborated closely with DIFs on the bill language to help make this end goal achievable. My H1 substitute simply removes data collection by county as DIFs is unable to capture this information. And I would like to, before we answer questions, allow testimony from my two guests today.
Great, thank you. Thank you, Chairman Carter and members of the committee for allowing me the opportunity to speak to you today. I'm Jessica Akmoody. I'm the Policy Director at CEDM, which is the Community Economic Development Association of Michigan. CEDM is a statewide membership organization with more than 300 members engaged in community-based economic development. Our members work to revitalize and strengthen communities and help residents build financial security and generational wealth. This work includes affordable housing development, downtown and neighborhood revitalization, alternative lending programs, financial counseling, and more. I'm here today in support of House Bill 4343, which would provide important information on payday lending usage in Michigan. With the passage of Public Act 244 of 2005, Michigan was the last state to legalize payday lending. That statute required a one-time report to be produced in 2007, but we don't have comprehensive information after that. So what do we know? We do know that payday loans in Michigan currently charge fees equivalent to an APR of 369%. We know that payday loan stores are disproportionately located in communities of color and that borrowers get caught in a cycle of debt that is impossible to escape. We do have data from the Consumer Financial Protection Bureau from 2016 that shows that 70% of Michigan borrowers take out a new loan the same day they pay off a previous loan. But most importantly, we know that without accurate data, we cannot and will not know the true scope of the harm perpetuated on Michigan's communities and their residents, especially the most vulnerable ones. So without a report, the industry continues to operate without transparency. While we have anecdotal evidence, we don't know the true statistics of the harm done to Michigan consumers. Moreover, the data we do collect, the statute only requires that to be stored for 3 years and then destroyed. All of this critically affects our ability to track the exact extent to which this industry is harming its own customers and document the ways that they are doing it. Thank you.
Thank you, Representative and Jessica. Good morning, Madam Chair and members of the committee. I'm Tom Hickson with the Michigan Catholic Conference, here today to support House Bill 4343. MCC is very interested in the issue of monetary access for Michigan's residents, especially those that are financially vulnerable. Over the last several sessions, legislation has been proposed to expand payday lending products into larger amounts, also with triple-digit interest rates. We are grateful that this legislation has been held off for several sessions in a row, largely because there are so many lower interest rate options available for people. And you have a handout at your seat that I've distributed that kind of shows just a subsection of some of those, or cross-section of some of those options. House Bill 4343 will help you as policymakers determine the impact that repeat borrowing from deferred presentment or payday lending has on the financial standing of the people of the state of Michigan. Much more useful data on the scope of fees and the volume of transactions can help inform future policy discussions on this issue as a whole. It is our hope that the information obtained from this legislation will be helpful to promote policies that help people get access to cash while not leading them into financial ruin. We urge you to vote on this simple legislation that will help collect important data on this issue. Thank you.
Thank you, and we can take questions now if anybody has any.
Okay, thank you, Rep. Conlon. Thank you for your presentation. I would like to make a comment before we open it up for questions. And my comment is I want to thank you. I live in one of those communities that's riddled with payday lenders, and the devastation that happens in my community for my residents not being able to pay those high interest loans back is pretty bad. So thank you very much for doing this piece of legislation. Now, we have some questions. Representative Young.
Okay, thank you. Really, it's not even a question. This is just like you. I was so excited to see this because we're always told that you can't really make any changes because you don't really know what's happening. So we had to start here. And I'm grateful that we're in a place where this will hopefully get across the finish line. My good friend Tom Hickson, he has been on my community conversations and my coffee hours talking about the perils of the payday lending. And I do believe, particularly Madam Chair, that we need to do some more in terms of educating the public on the different options that are available. We're still dealing with people who are unbanked and underbanked. And if we get you in a credit union, if we get you in a bank and you find out about these other options that you have, then you'll never have to think that you get so desperate that you need to go to the payday lending. And they'll always tell you, well, you know, this people, it's their choice. It is their choice. But do they actually understand a 300+% interest when you look at it? And most people don't. Most people don't. So I'm grateful for this, Representative, and for the partners there. Thank you so much, Madam Chair, for allowing them to come before you.
Thank you, Representative Young, and thank you for all the things you're going to be doing to help us get this information out. Now we have our Representative McFall.
Thank you, Chair. I also don't really have a question, because I know that not only does this disproportionately affect communities of color, but also they tend to open up around military bases, preying on military families, which is a whole nother why military families aren't getting paid what they should be getting paid, but that's a whole other issue. Do you know, like, how many payday loan, like, businesses there actually are in the state of Michigan? And, like, if they're mapped out, does it actually show that they are in these areas? disproportionately in these areas.
Yes. The last report we have is from 2018. I can make sure to get that to your office. We actually partnered with a national partner to map out every single store in the state, and it shows what communities they're in, so I can get that to your office. Also would like to point out that at the federal level, there's the Military Lending Act, which prohibits lending to active duty military over 36% APR. So they put a 36% cap for all active duty military a while back.
Okay, thank you, I appreciate it.
And I did find one statistic from 2016 that was reported out maybe in 2018. That is 94 million came in service fees in 2016 from Michiganders.
Representative Harris.
Thank you, Madam Chair. Well, I had one question, but if the chair will oblige me, I have a comment too. You said 32% for the military, or 36?
It's 36.
Wow, that just blows my mind. That's crazy. And if that's egregious, and I see a lot of head shaking, if that's egregious, I mean, what are non-military people? What's the average there?
It's over 300% is the average in Michigan. It depends on what state you're in, but yeah. And, you know, that just protects active duty military. It doesn't protect veterans.
Right.
It doesn't protect everyone
Yeah.
else. So there are 18 states that have a 36% or lower rate cap right now.
Yeah. Well, thank you again for being here. I think it's always great that the legislators here can be made more aware of things that are going on. Representative, you had mentioned an H1 substitute. What's the difference between what we've currently seen and what the substitute would be?
I'm not positive I know what the answer to that question. I'll try to find out for you.
Awesome. Thank you.
Yeah.
I'm sure we'll see it at some point, but
Yeah.
just curious. Thank you.
Thank you. Representative Fitzgerald.
Thank you, Madam Chair. One question I had, and this may be a question potentially for diffs. You know, the report is going to include information about the number of licensees, number of customers. You know, there's a lot of volume reports here. And I'm curious to know how that information is basically gathered. Is that coming from the institutions themselves? Is there any penalty for not providing that information? I mean, because we want to get the full scope of this, how is that enforcement mechanism that these are being reported actually going to be applied?
I can try to answer that, and then I'll let diffs correct me if I'm wrong. But all of the payday loans have to be entered into a database, a statewide database, because you can only have 2 out at a time. So this information is already being collected. It's just not being aggregated and put into a report.
Okay.
Thank you.
Thank you. Representative Scott.
Thank you, Madam Chair. Thank you so much for your presentation, and thank you for bringing this forward before us. But I have a question. Did someone say, and I think, if you can correct me if I'm wrong, is it 18 states that also have 36%? What are those states?
I can't tell you off the top of my head, but I can get you that information. The last 2 were Nebraska passed a ballot proposal a couple of years ago, and Illinois just did it legislatively.
Okay.
But I can get you that information.
Yeah, and so we obviously need to make some legislative changes to lower the interest rate, because this is egregious. 36 is high, 300 is just blows my mind, unbelievable. So, and why do you think that is, though? Why do you think that it's 300% here? Why did they determine that it would be that percentage amount?
It's actually, they charge fees based on how much you borrow. So per $100 you pay a certain amount. So it's like
Right.
15, 14, 13. And if you do the math on that, that's what it comes out to, is 369% APR. These are 2 weeks loans though, so.
Okay, thank you.
Are there any other questions? Representative Breen.
Thank you, Madam Chair. I apologize for my tardiness. I was trapped by construction in my own subdivision. Thank you, Representative Conlon, for bringing this forward. You and I talked briefly about some other efforts that are underway to curb these egregious practices. How is your bill going to work in tandem with the Attorney General's efforts? Because I know that she's definitely trying to crack down on this cycle of poverty that people get trapped in.
Yes, and you had pointed that out, and we were in touch with the AG's office, and basically, this will be information reported out yearly that will just be available for them to look at and have more of an indication of how many people are really affected by this industry in Michigan.
It seems like it would enhance her efforts then, and I appreciate then you bringing
Yes.
this forward.
Once again, seeing no additional questions, I'm surprised, not surprised actually, of how many cards we're going to read in about your bill. We have for Haley Combreen from the Michigan Credit Union League in support. We have Lori Brown of Michigan Poverty Law Program in support, not wishing to speak. We have Alex Morris from the Michigan Bankers Association in support, not wishing to speak. We have someone that wished to speak. Now that's a different one. Ross, you want to come up? You want to speak? From DIFS.
I will be real brief. It's been I haven't seen you guys in a while, and start of the year I was here all the time. Ross Yednock with the Department of Insurance and Financial Services. We regulate financial services and insurance industries, which include licensees under the Deferred Presentment Act. I'm here to offer DIF's support for House Bill 4343, which would require us to report certain data that's in the bill. We've spoken with our vendor. We're able to collect the data that's being requested. That is in House Bill Substitute 1, and to Rep. Harris's question on what was changed. The draft should be, if you look, I don't know if you have the original bill in front of you, but it's essentially striking out the line on page 2. The second line, identification of county in which the zip code is located. So it would still be statistics reported by county or zip code, transaction volumes, things like that. It's just the data we collect, we can't easily pull it by county, so we'll be able to pull it by zip code and all of that. But for better overall transparency and better understanding activity under this act, that's why we support the bill.
Thank you. Any questions for DIFS? Oh, Rep. Aragona.
Thank you, Madam Chair. Thank you for being here. If you don't mind, just wanted to clarify, I don't believe there's any cost that will be associated with this program. Is that correct? Or am I-
Correct.
Okay. And generally, and not to be argumentative or anything, but generally, departments tend to not like the extra reporting that sometimes we, the legislators, like to get and like to get more information. Can I ask kind of what brought you to the decision of you're actually going to come out in support of this bill?
Great question, but it's more to get information out about. We've received over the years numerous conversations with different lawmakers on what's going on in this industry, and at present we're not. This will require us to put that information out into the public view, and we're okay with that. We already collect it. This just hit a button to print it. So.
Gotcha. Okay. Thank you.
Thank you. Rep. Harris.
Thank you, Madam Chair. Just to follow up to Rep. Aragona. So is this something that can already be done, or do we have to have legislation to accomplish this?
I'm trying to think. Let me get back to you on that. I don't know if there's any legal reasons on why we can't do this currently. So let me respond and get back to you on this. But this would make it so we legally have to do that.
Okay.
So.
All right. Very good. Thank you.
Thank you. Thank you for your presentation and comments. Okay, going on, we have Robert Geiser from the Regulated Lenders Association of Michigan in support, not wishing to speak. We have Jessica, who's already spoken. There we go. We have Todd Tennis of the Center for Civil Justice in support, not wishing to speak. We have Rachel Richards, Michigan League for Public Policy, In support, not wishing to speak. We have Rebecca O'Connell from Lake Trust Credit Union in support, not wishing to speak. And our last person, Ruth Johnson from the Community Development Advocates of Detroit in support and not wishing to speak. Okay. Do we have all members present? Okay. Well, we have no members to excuse, so if seeing no further business to come before the Insurance and Financial Services Committee, this meeting is adjourned.